we can start off the bat here. Current market sentiment, things are going crazy.
Yeah.
Things are going crazy because bond rates are rising like insane. Like TLT is gapping down. Like first it started a slow trickle. Like, oh yeah, we're down a few cents on that, down a few cents. And now it's just started going down like 2, 3, 4% every single day, just slamming. No breaks. No breaks. So this is what I want to ask you guys, like how are you handling it? Starting with you, Beau, like what are you doing to like hedge in this time of volatility? Because I know you're pretty bullish on the SPY going up. Like you started off really great on this year, things are looking up. I mean, we're lining up with a great stimulus package coming around the corner. Like what are you gonna do? Do you think is this gonna continue, or we're gonna see more downside, or what's the deal?
I mean, personally, I think that it's always good to take profits. No one ever went broke taking profits. With a lot of my more near-term stuff, I actually sold most everything, even things I was down on when I saw that the market was really starting to fall heavy. And so I went heavier into cash when I saw the market going into a free fall, sort of. Yeah. When at the time I was all into calls, I was all bull. But I looked at my positions and I repositioned myself into playing some of the bear side as well. That, as well as just sticking to my plan and not going outside the boundaries of my plan. Like sticking to, an exit point of where I'm going to sell if it goes up, or where I'm going to sell if it goes down, and cut losses. So both of those have helped me to, hedge and cut the most losses as I've been able to during this big little dump rotation we've seen.
Yeah, that's important. Always come up with a plan, entry, exit, whether you're going to take a loss, even if it's going to turn around. You want to make sure that at the end of the day, you could be wrong. So no sense in not having some cash. I know a lot of people, they say that, they don't want to have cash when they look at their buying power just sitting there, even if it's like $100 or $200. They're like, I have to spend this on something. But I mean, you don't. You don't. Having cash is an asset too. I mean, now it's going down because of inflation and all that. It's not worth as much, but that's more of a longer term thing. So Beau, you're more looking for the long side. You still think we have long upside? That's what you're positioning to.
I still think that we're gonna trickle upwards.
Trickle upwards, yeah.
Yeah, I think we're gonna see big movements like this, but I think, averaged out, we're going to trickle upwards still.
I see. So, Pickle Rick,
Yo, what's up?
Love for all the crazy small caps plays that you come out with. So how are you, what are you doing in Pennyland with like this right sea now, of volatility?
I'm looking at Boxel. I'm doing well with it. But that's just the thing. When it comes to small caps, when you're playing off of SPY or another indice, it's pretty easy for you to make money because they trade with SPY usually very well. And they're getting pumped heavily all the time. And you find the right ticker in small caps that's running on a proper news catalyst that you've been doing a good proper DD on. Something you've been watching for a while. You've traded in a range. You've identified, you've done some TA, done some charting. You've really broken down the financials and everything about the company, and you're confident. You've built your conviction. Small caps are pretty good, safe bets. And I say that because they are bets, because they can dump and fall on a dime. Because big money, players get in. You got your YouTubers and you have your other people of sorts. I came from a very large Discord, and that was their main thing, was pumping up small caps. And it was fun. It was high risk, high energy, but that's kind of who I am. So I'm really into that sort of thing. But I've kind of filtered a little bit out. All my calls are longer term now. I'm not playing the shorter term because I kind of saw this coming. I didn't really predict exactly when this was going to come. We all kind of, as a whole, the community of traders that I talked to, we all kind of predicted, a dump, and then we want to see SPY up over 400, honestly, before summer, and then, it's fall, and then run up, Santa rally again like we had last year, not that long ago. But I'm very, very bullish on SPY long term as well. Short term, kind of bearish right now, but we tend to be reversing right today. But this could, again, we don't know what's going to happen. I'm not really into politics lately. I have been, but not recently. I've got a lot of stuff personally going on. I just bought a house. I'm moving. So my life's all over the place, but I'm still trading as much as possible. I'm still in next gen, doing as much as I can.
That's good. That's good. You're doing your thing. So you mentioned earlier that, you talked about, safe bets with going with the SPY and everything for these small caps. And you talked about conviction in your trade. So let me ask you with these, how volatile small caps are when you're going in for a trade, whether it's downside or upside, like how does your conviction play into that? To like, when you're going out for a call, how far are you letting that thing drop? Do you have like specific numbers in your head that you'll let it go to, or like specific numbers that you want to get out at? Like, how strong are your convictions on your trades?
Depending on the stock, depending on the price action of SPY on that day, whether it's going on a like 1 or 2 day run, day 2 or day 3 of that run, placement of the movement of the stock throughout the week, you want to usually have end of week runs where you can get in on a call on, say, like a Thursday for something a few weeks out. And then I don't really look for specific percentages or numbers anymore. I've gone based off of like base hits, doubles, home runs, triples, all that. And, 20%, 25% is a single, and so on and so forth. But once you get over 100% and, you've got a few weeks left to ride, you're in the money, you can usually get out of that and then snowball those gains into something even further out on that ticker, or you could just move on to something else. And that's how I've learned how to compound gains in options land and turn a $2,000 account into, say, 25K over PDT in a very short period of time, multiple times. And somebody else taught me that particular strategy in another Discord, but it was something that he one-on-one with me via just chatting with me in the DMs. Like whenever he had spare time, like he would just post a play and be like, hey, I'm probably going to get in around here and get out around here. And then just take that money and move it into something else. And before you know it, those gains started compounding, and I was watching him grow 4 separate accounts from 2,000 to 25K using just that strategy. Just going straight calls all the time in a bull market. And it tended to work out pretty well. So, I mean, that's what I do. I still play small caps because they're fun. When the market's boring or when I'm bored and I have some spare buying power, I get into some small caps, but always hedge when you have an absolutely horrendously bad day or an absolutely tremendously good day on, say, something like UVXY or VIX or whatever it is that floats your boat, to hedge. Kathy's saying Bitcoin is now a really good hedge, and I agree.
That's interesting. You said hedge on the good days too, because a lot of people don't look for hedging or like scared like opposite side of their trades until everything starts to go wrong and blows them in their face. But by then, it can already be too late because now you're buying the bottom on the other side. So you said like even on your good days, like you're looking for like, okay,
yeah,
that's prepared for a possible downside.
Nope. It's always good to look at the prices of what these hedge stocks are going for on those really good days where you're up. Like I woke up this morning, my total P&L on my little challenge account for next gen was up 20%. Total account P&L for the day. I was like, that's great, So I'm looking at UVXY.
To agree with you there. I picked up one earlier after my Tesla win.
There you go.
So where do you guys see SPY coming to, like the end. The S&P's like, you know, it's
pick me.
oh, the resident bear is back. There she is. So, you know, we were just talking about how great everything is that you know, how things are going for the SPY lately, but you know, it's coming down. Like I know that you're obviously on the bear side of things. Like, what's your thesis for what's been happening last year, and you know, how are you handling things?
All right, so 2020 was just awful in so many ways, personally speaking, and then having to deal with such a heavy take up here. 2020 sucked, and so you had like a few things happen. You had a lot of uncertainty, and markets don't like uncertainty, right? We obviously saw that with the coronavirus, but then you had, economy-wise, you had Jay Powell and Mnuchin that basically followed with like monetary policy and fiscal policy, and they basically turned on the printer in order to inflate the market and just to continue a bull run. Which typically, like, what you see is, like, if you see something that's more than 10%, like, typically there's going to be a huge bounce as far as recessions or anything goes. If there's like a very steep 10% correction in the market, that's just, excuse me, historically speaking, when you go back to the statistics and everything and you look at the previous data, it's always going to happen. It's bound to happen. But then we have a big thing of inflation that is just right around the corner now, with the high bond yields, and you have an insane valuation as far as P&E with companies like Zoom, for example. I'm extremely bearish on. I've been bearish on them for a while now, and we're going to have a rotation in the tech stocks. So things that did not do very well during the coronavirus, we could potentially see them rise and go back to like more of like a fundamental analysis instead of looking at it as like a bond yield analysis. As far as that goes, like with the tech industry, I see two possible outcomes. I could see our bond yield going down in price as a pullback, and possibly, like, if it goes lower, then we could probably be on track to the 400. Or I could also see us gaining basically like an extra 1.5% to like a 3%, like in March near St. Patrick's Day or something around there. And that would put us into a full straight out bear market. And that would also coincide with Bitcoin's inflation, right? So like hedging Bitcoin as an inflation part. I think that was per Cathie Wood's statement. Yeah. So that would coincide with like what her thought is as far as like what our market is about to see. I am currently majority liquid. I don't have any positions right now in any stocks, and I like to scalp more than I like to do long-term holds. But that's just my style and my strategy.
I see. So you think it could be like, we can maybe see, because I'll ask you this, because I mean, yeah, I agree with you. Like, these corrections, they come, but they seem to almost like go away.
Yeah, they dissipate out of thin fucking air.
Thin air. It's just like every time, like, we go back to the financial crisis, even when we had that issue, like, there's always some kind of new issue that comes up that brings the market down, but then people find another reason why they want to buy again.
Yeah. Well, I mean, you're always going to have three types of people. You're going to have the optimist, you're going to have the pessimist, and you're going to have the realist. And I'm more so of a realist. That's either, I mean, honestly, like, I'm mostly bearish. I make more money as a bear than I do a bull. And sorry, but
That's
I enjoy being a bear.
that's okay.
And
That's okay.
and then I can buy in on the dip later, and then I can ride it all the way back up. But where we are right now, so we have cryptocurrency, right? That really just like sprung it forward into 2021. It was kind of like in a bubble as far as like waiting to pop. Let's just see what happens in 2020. I think like the low back in 2020 was like 4,000 or something like of coronavirus and stuff. And then the more wallet users you have as far as like with cryptocurrencies and stuff, like I guess from my understanding of it, the more wallets that are in it and the more active users there are, that means that it's more valuable, I guess, in a sense. And then pair that along with like a market cap or whatever that's only like 21 million. And you also have like a percentage that can no longer even get into their wallet, that probably has like a crap ton of Bitcoin sitting in there, and they're probably pissed as shit. So like you have that along with like Ethereum. Like Ethereum kind of mimics, well, I shouldn't say kind of, it does. It mimics Bitcoin very much so. But the number of users that you have, in a given cryptocurrency, the more valuable it becomes. And with the way I'm reading it, as far as like being considered a hedge and like the historical data that comes with Bitcoin, typically March is also like the worst time for Bitcoin. The only other time that we didn't see Bitcoin like fall in March was I think like back in 2012, I think. It was like 2012, 2013. They had like an insane amount of growth. And I think it's basically like part of the Elliott wave. And, we could see like a pullback all the way down to like 38,000. And then we could see like a big ripper following, months to come. I don't think it's going to happen instantaneously overnight. But if you're comparing, like, if that's a great hedge, right, for rapid inflation, then that would give more conviction to like a higher percentage on the bond yield. Not saying that that's necessarily a bad thing, but when you're talking about as far as like growth percentage, right, because the yields do not, they don't do it by our current economic data. They do it by our future growth. That's why it's very important to understand that. So if you have a very high interest rate, that basically insinuates that we're currently doing a lot better than we are, and we're being propped up currently by our government in a highly inflated market. So to me, that's bearish form. That's bearish sentiment, because if you take that away, what happens? Like Newton's law here, what comes up must come down eventually.
That's an interesting point, because I was thinking the same thing. It's like, what happens when the Fed stops spiking the punch bowl and everyone gets sober?
Man,
there's no more party,
for
right?
A year sucks.
Exactly. It's like, and maybe people start to, because we already seen this rotation coming out of tech currently before our eyes. Like, people are starting to pull back on growth and be more into value dividends, because it seems to make more sense, because maybe the stocks rise with inflation a little bit, but they also get that dividend yield with it. Because if you're just going into these bonds that are like predicting our future economic growth, and every day Powell saying like, we're still far away from where we want to be, but we can recover, it makes it seem like, well, if inflation comes through, then you're basically going to be negative on any bonds that you buy. So it doesn't seem like a good time to get in.
It's not necessarily even just considered inflation anymore. Like at this point, I would consider it more of like a hyperinflation.
Hyperinflation, yeah. So what I want to ask is that, so we have, this rotation out of tech, and we're going into more value. You said people are going to be more value, like, people are going to have better evaluations. What would be your evaluation on some of these, like, the value stocks that have been hit like the hardest? Like, we got these travel stocks and everything. They're like, hospitality, things that are actually, they're not at their March lows that we had last year, but, they're actually it would be considered significantly higher, but they're still far away from where they were, previous to the crash. Do you think that these evaluations are good now, or do you think, we could see them continue going upwards?
I think that we might have like a possible pullback, but that's also depending on the industry that it falls in as well. So like I could see like, for example, United Airlines and like Delta Airlines and JetBlue, things towards that nature. I could see like a more of a run up on them. I could see a run up on CCL, and I could see a run up on Royal Caribbean, and then the other one, it's like an NCH or something like that, because you have summertime, people want to get out. There's a lot of people that are going to be hopeful, and hopium is what drives the market more than anything. And then on the flip side of it, like I see like prime example, like Zoom from Tech Stock. Boeing, I'm a little indecisive on just because of the news that came out, but at the same time, like we have like a possible defense sector play. So like with the news of Syria and stuff that just came out yesterday, we could have like a possible rotation into defense sector stocks coming into play. So that would be like Lockheed Martin, NOC, Boeing, OSK. OSK is a great one. They just landed a contract with the United States Post Office. Sorry, I just had a phone call. United States Post Office. So we could definitely see if any type of war is declared, then industrial sector will boom tremendously, and I think part of tech will boom as well with it. That it coincides with like nuclear defense sector plays.
See, okay, so what you're saying is like, you're a bear, think these evaluations are high, and then, I mean, I agree with you. A lot of these are high. Like people are running up on even the platform that we're using right now, Zoom. Like I agree. There's no reason why. The only reason the valuation was like that is because COVID. Like we're like, oh man, we're never gonna go into in person or do anything this wise that's in person again. So, and even then, I mean, this probably won't be the only platform that's available for people to use. I mean, we had Skype back in the day, so it always rotates. So like, you're still staying on your toes, which is good because you're ready for the news, ready to rotate into the next thing, and that's good. Can't always be. Can't just go straight up.
A prime example was Zoom. So yeah, like coronavirus hit and everything, and basically just shunned the world of like going out and being like a public figure. So you had to turn to the internet. Much similar, I would say, probably when the rise of like .com, you could probably compare the two like data points on it, and which is great and all, but you have to look at the fundamentals part of it, like, and what I mean by fundamentals, Zoom is a free product. Like, I don't see them providing like, like blow out earnings the way Amazon and Apple does. When coronavirus hit, when coronavirus hit, like their sales went like through the roof because again, no one could shop and people needed computers in order to do their work. So the first thing that's going to happen is all that stuff is going to skyrocket. And that's exactly what happened. But now we're coming to the realization okay, well, Zoom only does really give a free product and they really don't have blowout earnings. And like, is this like a legit company? Like now we're second guessing ourselves, which should have been second guessed to the at the very beginning. Yeah. And these are the type of stocks that, like I talk about, that will make a person rich, but they'll also make a person poor as well if they don't study the fundamentals.
Fundamentals are important. That's why you don't end up with, AMC and GME to the moon. Mm-hmm. But that being said, what I kind of want to do is, ask you guys, start with you, Kayla. So what's your favorite stock? Like, what's one that you love to trade day in and day out?
The ETF of S&P 500, SPY. That's my favorite.
Okay. Like you just like playing the overall market sentiment. Where are we
and that's what I like.
Yeah. Respectable. Any ones that you like, any personal companies that you believe in going forward that, you know, 'cause I mean, I know you're a bear, like Zoom is one you said that you really dislike the evaluation on that. Do you think,
I could honestly see that one going underneath 200.
yeah,
Like as a squeeze to underneath 200. I would say respectively 220 and below. I think that would be considered a fair valuation for that company, like per share. But like 540, come on, really?
yeah, it is pretty insane. I'd have to agree with you there. It doesn't make any sense at all. Yeah, and then I mean, you already know what my stock pick is. Told you guys already. You already
Mickey
know
Mouse.
Mickey Mouse, the clubhouse. You know what I'm saying? You know, grew up on, you know, Phil of the Future, you know, all that good stuff back in the day. Love Disney because I think they're going places. Like they got the streaming service, which is hot. We see how much Netflix makes money off of that, and they're doing really well. But Disney has that, and then they have, you know, all the physical sales and stuff that they do. They are the kings of making cash cows. That's just what they do.
Yeah, I like Disney.
Think
Not as much as you, but I still like Disney.
Yeah, I think if their parks are going to open, because before COVID hit, parks were 30% of their revenue, which is a lot. So them having 30% of the revenue taken away because of COVID is pretty huge. So if that comes back, and now the streaming service is making up for more than that, really. Now it's just like in the future possibly could make up more, but it's I think that's going to do a lot for them. So I want to throw it back over here to Beau. Let's see what's your favorite stocks here. Which ones you're looking at
Right now, my favorite plays right now are Bitcoin plays, honestly. Those high volatility stocks like Riot, Mara. Like longer term, I'm bullish on them, but they're just so volatile that you can really, if you can play both sides on them, you can make a lot of money with it. And so I think there's a lot of opportunity in those Bitcoin plays, especially right now that we've, you know, dipped back under from our highs at 58, sitting at around like 46, 47 on Bitcoin now. That's just going to take Mara along for the ride the whole time. And so I think there's a lot of opportunity on both sides for Riot and Mara. I think there's some other ones like CAN, SOS. Those are all good blockchain crypto plays.
Yeah, so you're bullish on the blockchain. Loving it.
Bullish, but take advantage of both sides.
Both sides. It is very volatile. See,
Exactly.
Mara is a complete it basically is a complete what's the word for it? It's leveraging Bitcoin, basically.
Yeah, it is. Yeah.
It's a full-on Bitcoin leverage. Those Riot.
It's if you want to trade, you know, options, you know, crypto options, Bitcoin options, Mara is a great one.
Yeah. And those
Speaking of, Coinbase is going to be IPOing.
really
They are.
Wow.
Yeah.
That is one IPO I'm very excited about, along with the Roblox IPO. Those are two that I'm actually looking forward
I
to.
wonder what that valuation of Coinbase is gonna.
I don't know, but last year they brought in like $1.6 billion worth of revenue.
Nice.
So
Yeah, they could do.
1.4 billion, 1.6, somewhere around there. It was over $1 billion. Let's just put it that way.
Yeah, I'd rather put my money in a Coinbase IPO than a Robinhood IPO. That's for sure.
That is for sure. I think we can all get behind that one.
Oh man, so Pickle Rick.
Yo, what's up?
So then, what's your favorite stocks you're looking at? Like, what do you love?
What do I
Trade.
love?
Yeah.
Oh, you're killing me. Vuzi, Catabasis, FUV, Snapchat, Pins, Voxel, BBW, that's Build-A-Bear, SELB.
Build-A-Bear. Whoa, wait,
Yeah.
Build-A-Bear is publicly traded? I didn't even know that.
Yep.
That's crazy.
BBW.
That's what I said yesterday. I was like, Build-A-Bear is a publicly traded company?
Yeah, I saw someone post in chat BBW. I was
Like
thinking
Yeah, I'm
couple
thinking like, wait a
locations.
second. You're not thinking about the same thing I am. I'm like, oh, I'm gonna try to use that in like a different conversation, and then you'd be like, what are you talking about? I'm talking about Build-A-Bear.
Good Build-A-Bear, dude.
Yeah, the stock. I invest in it. They're like, oh, okay.
man, I love me some BBW. What are you talking about?
And then SESN, Box. I really like Box. It's like kind of like Dropbox, but better. I'm still in Dropbox. I'm in CBAT still. MJ, Kroger's. I love Kroger's. And MOON, the space ETF. I'm super heavy in them right now.
Space.
Yes, sir. And look forward for like March 23rd or something. ArcX, Cathy
Yep.
Wood, or Space Exploration ETF. I'll be buying a bunch of that. A bunch of that.
Oh,
And you have like a reverse merger with Lockheed Martin and AJRD?
Lockheed Martin purchased Aerojet Rocketdyne a month or two ago.
Yeah. There you go.
Yeah.
You have that too.
I'm also a fan of Upwork, ticker symbol UPWK. That's probably
Upwork.
a year hold for me. I actually Next Gen Moonshot gave me that play. I did a little DD late at night and I loved what I saw, and I ended up longing it last week. I'm down 11% on it, but like I said, it's a 1 year hold. I'm not worried about it.
Yeah, Upwork is actually pretty Upwork. And then do you invest in the Fiverr as well?
I don't. I should though. CSIQ I invest in. It's basically like I was talking about it earlier. It's like kind of like JKS, but like better.
All right, so we got your favorite stock picks going on. I want to hear end of the year. These are just predictions. End of the year. Where do you think the S&P 500 are going to end up at? Where are they? Me personally, I could see us at 430. Not gonna lie, 430 end of the year. Crazy, I know.
I'm saying 420.
420.
I'm saying 420.
Blaze it. I think it's gonna be a slower melt up. Like it's not gonna get too crazy right away, but I think even with this like little bit of rotation, like the sentiment, as long as I will say, unless we get a COVID 2.0.
Well, they just said identified a new strain in New York City the other day. I was out having dinner with my wife and son at the pizzeria in town, and it just went across the news on CNN. New strain of coronavirus detected in New York City.
Wow.
I'm like, yep.
I'd have to agree with you, man. I really think unless we get like a new killer COVID strain or something serious, I think that we could definitely see like 430s. I think that this trend will just continue as long as everything stays according to plan. You know what I mean?
Yeah. There'll be some hiccups along the way, but
yeah, of course.
People want to make money, and then if the government's going to bail you out, it's either going to be owning the house or the stocks, right?
Yep.
It keeps printing money. So Kayla, I know your answer is going to be very different from mine, but
Actually,
no,
I could honestly, I could see honestly, like possibly a 415 area
415
is what I say. Yeah. I think that also depends on a lot of things too. Like in the near future, depends on jobs. It depends on inflation. It depends on the devaluation of the dollar. It depends on a lot of things. Depends on like rotations.
Yeah.
Which we're currently seeing.
Yeah.
There's a lot of that going on. People getting scared left and right here. Well, just the retail traders. Hedge funds are like, oh, okay, I guess I buy American Airlines now. You just gotta go with the flow, you know? That's why you can't be And the one thing I learned about this trading stuff is that you have to be ready to swing whatever comes your way, you know? Aim for the fences. But yeah, thank you guys. Thanks again for joining me. Next Gen Dante over here. We got Pretty Boy Beau. And we got Ammo. He is
Pickle
again.
Rick.
Pickle Rick.
I'm Pickle Rick.
You follow him
I can't
on
wait to
Twitter.
do this again. I'm excited. Let's do this next week.
Oh yeah,
Yeah,
we're
I'm
gonna be
excited for
bringing
the
this
next
podcast to you guys every week. We talk about market sentiment, things going on, some of our trades. We'll be doing different topics and things to help you out. And then thank you, Kayla, as well. Trade like a girl.
Hey, I try.
I need to learn a couple things from you because you know the ways of the bear. I mean, they're eating right now. Not
You
gonna
know,
lie.
like I just find it funny. Like, oh no, screw a gay bear. Okay, that's fine. And then when stocks, you know, decide to, then people are like, you know, hey, like, how exactly does this work? What's the concept?
Exactly. You got to eat what you got to eat, and then you go into hibernation, right?
Mm-hmm.
Hibernation for the winter.
Yeah, I will. Look, like when she can play out in the sandbox, she has fun. But,
Well, then, it's a great time. But love these guys. We're all in the Next Gen Discord. Want access to alerts and plays, the nature. Want more information from us? You know, you can hit us up at nextgeninvestors.com. Join in the Discord, get the plays. Tune into this podcast every week. We got you covered.